Gold prices just set a new record high because investors are still worried about inflation, especially because this Friday there is a global central bankers meeting at Jackson Hole, Wyoming, and Jerome Powell, who's the chairman of the Federal Reserve Bank, is going to be speaking, and a lot of investors are thinking that he's going to hint at how he plans on cutting interest rates later on in 2024, and if that creates more inflation, well, that's going to be good for gold. At least that's what investors assume. Secondly, the reason why this comes at an interesting time is because, of course, we're starting to see more and more Americans start to struggle with money. If you read market briefs this morning, you've probably read this fun fact, but the New York Times published a study that they did, and what they found is that almost half of Americans that are going to Disney World with kids under the age of 18 are financing their vacations to Disney World and Disneyland because they can't afford the ticket prices, plus the flights, plus the hotels. You should turn that into a Pixar animation. Third, Lowe's came out and they released an earnings statement. And the CEO of Lowe's essentially said two things. Number one, Americans are waiting to remodel their kitchens until interest rates start falling. And number two, Lowe's expects Americans to spend less money on home improvements. They expect to spend less money on things with buying new homes, at least through the end of 2024 and probably through 2025 as well. So what I want to do in this video is I want to go over three things. Number one, I want to go over what's going on with gold. Number two is I want to go over what Lowe's said and what this means about the economy. Number three is I want to go over what you should expect about this Jackson Hole, Wyoming meeting with the central bankers around the world and what this means for you. So let me start by talking about gold. And I got to give you that disclaimer because I'm just a random guy on YouTube. I'm not a financial advisor. I don't recommend what I do to anybody else. Make sure you own due diligence and never blindly trust a random guy on YouTube. So let's start by talking about gold because gold prices just broke a new record high, passing $2,500 an ounce for the first time in history. Now let me start by talking about why investors invest in gold. But more particularly, let me say why I invest in gold. I have been investing in gold not just in 2024. I've been doing this for years. Okay, just let's put this out there because I think a lot of people start to chase things after they start breaking record highs, but you got to understand that sometimes you got to be able to calm the emotion down and understand the reasoning behind certain things. Why do some investors like to invest in physical gold? Because gold is a hedge against inflation. What do I mean by that? If you were to take physical gold and a $100 bill and bury them in your backyard today, in 10 years, which one is going to keep its buying power more? Now, we don't know for sure what's going to happen over the next 10 years, but my theory is that the gold is going to hold more buying power. Why? Because our $100 bills, our currency, is a fiat currency. That means you can print more of that money essentially on command. If the Federal Reserve Bank were to print more money, well, that would devalue the value of each currency. That's why things have gotten more expensive, not just over the last 5 years, but over the last 50 years. Because inflation means you're increasing the amount of dollars out there, which makes the value of each individual dollar go down, causing the price of things to go up. So some investors like to own physical gold as doomsday insurance, as a hedge against that inflation. But you also got to remember that gold doesn't produce any real value. Because when I invest in gold versus stocks or real estate, that gold doesn't actually do anything. It just sits there and looks back at me versus when you invest in stocks. If you were to invest in the Amazon company, well, the CEO of Amazon is working to produce a better product. They're working to produce more revenue. They're working to increase their profits. They're working to grow. When you invest in a rental property, that's providing a home for somebody. It's providing an office for somebody. It's providing a business space for somebody. So it has real value versus the gold is just sitting there. Now, yes, of course, gold can be used in dentistry, can be used in electronics, but when regular people invest in gold, it's generally just sitting there as a hedge and not really doing anything. And this is where you got to understand the difference between an investment and more protection. Again, this is just what I do. I don't recommend what I do to anybody else. But for me, gold is just a small piece of my portfolio because I understand that it's not really an investment. It's what I call a hard savings. It's a way to save hard money. So it's only 2% of my total portfolio. And this is where I want you to be a little cautious and don't just chase a gold rush, but rather understand what's going on and make sure it fits within your portfolio if that is something that you're considering, because I know a lot of people have been trying to jump into the gold bandwagon just because they're seeing it rise without really understanding what's actually happening in the gold market. So of course you have worries about inflation. You have the Federal Reserve Bank talking about cutting interest rates potentially in September. You have the central bankers meeting in Jackson Hole this week. And so all these things have people concerned about inflation, which is why we've been seeing this rallying in gold. But you got to understand how gold plays a part in your portfolio and what gold actually is. Now, there are a few different ways that you can invest in gold. You can own the physical gold, you can invest in gold certificates, or you can invest in companies that are mining gold. Now, if you were to go out and buy the physical gold, you got to go to a gold broker or gold dealer, and there are also a lot of platforms on the internet that can automate and systemize this process for you. Investing in gold certificates is investing in something like an ETF that gives you exposure to physical gold. You don't actually own the gold, you get a certificate that says you own the gold, and then you can invest in companies that are mining the gold. So there's multiple different ways that you can play it. You can kind of think of it like Bitcoin. You can invest in the actual Bitcoin, or you can invest in an ETF that gives you exposure to that Bitcoin. You got to find what's right for you. For me, when I invest in gold, I want to own the actual thing, not a certificate. The second thing I want to talk about has to do with lows, but I do want to just mention this one more time, that when I invest in gold, I don't care what's happening in the price. I really don't even monitor the price of gold. For me, it's just a hard savings. Whatever happens, if gold goes up, great. If it goes down, oh well. I mean, it's just one of those things that you got to understand, and don't chase the rush. Number two, I want to talk about what's going on with lows. Again, we covered this in Market Briefs. Market Briefs is my free financial newsletter. If you have not joined Market Briefs, it's a free and easy way for you to stay up to date on what's happening in the financial markets. We cover the stock market, the economy, the housing market, the global economy, and crypto into a fun, witty, and easy to read newsletter. It's completely free. You can read it in less than 5 minutes every morning, and I got the link for you down in the description below if you'd like to join. Going on with Lowe's, what Lowe's said is essentially 90% of the customers at Lowe's have a 30-year fixed rate mortgage at 4% or lower. And because of that, this is according to the CEO, they don't want to go out and finance home improvement projects, things like kitchen remodels, things like finishing their basement. Because if you were to go out and borrow money to do these remodels in your home, you're going to get a much higher interest rate, so you don't want to do that. This is why Lowe's is saying that you have all these homeowners that are essentially just waiting for interest rates to get cut before they go out and start financing more kitchen remodels and basement remodels and other home improvement projects. And interestingly, this is kind of exactly what Home Depot said as well. Home Depot reported last week, and they said essentially the exact same thing, that they're predicting lower sales, that Americans are struggling, spending some money, and they're waiting for interest rates to get cut. That way they can go out and start borrowing money and start doing these home improvement projects again. But what's interesting about this is Walmart had a very different thing to say. Walmart said that they are seeing an uptick in sales. Part of the reason for that uptick is because more and more people are shopping at Walmart, including higher income earners. So as you start to take a look at consumer spending, because we all know that consumer spending is a big part of what drives the economy. It's about 70% of our economy. The other third of our economy is the United States government and their spending. But the consumer spending that makes up our economy is people spending money. That's what drives our economic system. If people have money to spend, our economy can continue to grow. If people run out of money, then our economy can't keep growing. And as we take a look at where our economy is today, we've seen the growth slow down, partially because Americans have tapped out on credit cards. They've spent a lot of their savings, and they can't keep overspending. This is one of the reasons why the Federal Reserve Bank is looking at this economic slowdown, and they're saying maybe we should start cutting interest rates to stimulate the economy again. Now the concern is, well, that could lead to inflation, which ties into the third part of this video, which is what's happening this Friday at Jackson Hole, Wyoming. It is a central bankers meeting where we're going to have central bankers from around the world talking about policy, talking about the economy, talking about inflation, and of course Jerome Powell, who is the chairman of the Federal Reserve Bank, will be speaking. And the reason why everybody has their eyes on this is because this could give some indication as to what the Federal Reserve Bank is thinking about doing when it comes to interest rates. Now, the next time the Federal Reserve Bank is scheduled to speak here in the United States is in September. And this is where essentially everybody is predicting, and this is what the Federal Reserve Bank has been hinting at, is that they are predicting an interest rate cut coming in September. How much and how aggressively, we don't know. And this is what a lot of investors are keeping their eyes on for this meeting on Friday, because they're hoping that it will give them some insight as to what the Federal Reserve Bank is planning to do, because that could help give them insight as to how much would this stimulate the economy. Would it entice more businesses to borrow money and spend more? Would it entice more people to go into credit card debt and spend more? Would it entice more people to get a car loan and buy more cars and buy more homes? Or is it not going to be that aggressively? Now, of course, the Federal Reserve Bank has to balance the interest rate cuts with inflation, because if they cut interest rates too aggressively, well, now you can make the inflation problem worse again. We've already seen mortgage rates fall over the last few weeks as people are anticipating and hoping for an interest rate cut. Well, if interest rates get cut and mortgage rates fall more, we could see a bigger boom in mortgage applications and refinancing applications. We've already seen between last year and now, refinancing applications jump by more than 100%. Why? Because of the small drop in interest rates. Well, if interest rates continue to go down, you bet that there's a chance that refinancing applications will go up even more. And if refinancing goes up even more, that means people have more cash in their hand. Now, of course, it's not money, it's debt. You got to pay it back plus interest. But in the economic system, it doesn't really matter, because that gives you money to go out and spend at Chipotle, buy the extra guac. It gives you the money to go out and buy that BMW. It gives you money to go on that vacation because, well, you're seeing Marriott and Hilton talk about how people are booking less hotels and going on less vacations because they have less money. Just like how Disney said that almost half of Americans that are going to Disney with kids are financing their vacations to Disney. Why is that happening? Because people are running out of money, they're running out of savings, they're not making enough money to continue funding their lifestyles, and they're tapping out on their debts. And this is where the Federal Reserve Bank is going to essentially make that decision of what's more important right now. Is it continuing to bring inflation down, or is it to prevent the economy from slowing any further? And of course, we have an election in 2024, which adds a little bit of an interesting wrench into the whole dilemma. But this is where it's important for you to be able to cut through the emotional noise. Don't make investment decisions based off of what's happening in the day-to-day. You want to be able to stay calm, find the opportunity, and build your wealth. And of course, that requires you to build your financial preparedness. That means have that cash to be able to invest, build your financial education, which is all about being able to analyze your investments, and being able to identify financial trends, because you want to invest your money where the money is going, not where the money is moving out of. Of course, we have a newsletter at Market Briefs called Market Briefs Pro, where we go over financial trends, but you can start with Market Briefs. It's a free resource where we go over what's happening in the markets day to day. And with that, I will see you on YouTube tomorrow.